Hello guys, let's go look new Reddit story.
China just announced an 84% retaliatory tariffs on U.S. goods. Now what? How do you think this plays out? China's 84% retaliatory tariff on U.S. goods. A new Cold War? The news hit like a thunderclap. China, the world's second-largest economy, had just imposed an 84% retaliatory tariff on all imports of U.S. goods. It felt like something out of a geopolitical thriller, but this wasn't fiction. This was real, and it sent shockwaves through every market, trading floor, and consumer's wallet across the globe. At first, the reactions were slow. Is this some kind of misprint? Some questioned. The world had gotten used to tit-for-tat tariffs over the past few years, especially under the last administration, but 84%? That was something else. It was more than a slap in the face. It was a heavy blow to an already strained economic relationship between the two countries. The U.S. had been facing tariffs for years, but this was a new level of escalation. At first glance, it wasn't just a trade dispute anymore. This felt like a Cold War unfolding in real time, with economic weapons replacing nuclear ones. But the real question was, what next? Part 2, the economic fallout. Within hours of the announcement, stock markets across the world began to drop. Investors had already been on edge, worried about the implications of an ongoing trade war between the U.S. and China, but this new move seemed like the point of no return. The Dow Jones, S&P 500, and NASDAQ all took a hit, with some of the biggest losses seen in tech stocks, which rely heavily on Chinese manufacturing and markets. The financial community was left scrambling. "What do we even do now?" said one hedge fund manager on the floor of the New York Stock Exchange. This could be the beginning of something much worse than we thought. Investors started hedging their bets, pulling money from international stocks, and diversifying into safer assets like gold and U.S. treasuries. The tariffs would hit a wide array of goods, from electronics and machinery to agricultural products and luxury goods. China, in its retaliation, had specifically targeted sectors that would send a message. The move wasn't just about money, it was about power. China knew how interconnected global markets had become, and by choosing products like soybeans, aircraft, and even Hollywood films, they were hitting where it hurt the most. For American farmers, it was a punch to the gut. Soybean exports, which had already been deeply impacted by the previous round of tariffs, now faced an 84% penalty. Farmers who had barely survived the last few years of trade uncertainty were now looking at a future where their largest export market had become prohibitively expensive. Part 3. Corporate America struggles to adapt. Corporate America was already reeling from the initial tariff wars, but this felt like a game changer. Big corporations, especially tech giants like Apple, Microsoft, and Intel, found themselves facing the possibility of losing billions of dollars. Manufacturing hubs in China, which had become integral to global supply chains, would be deeply affected. If the U.S. was to retain its competitive edge in industries like technology and automotive, it would have to find new ways to produce and innovate, and quickly. Apple, for instance, had already been considering moving some of its production to other countries, like India or Vietnam, to diversify its supply chain. But with China now becoming an economic fortress, it was clear that a huge portion of American consumer goods would have to be manufactured elsewhere. The logistical nightmare of reshuffling supply chains across Asia wasn't something that could be done overnight. It was going to take years. But it wasn't just about production. Consumers would feel the sting, too. An 84% tariff meant higher prices at the checkout counter. If you've been eyeing the latest iPhone or looking for a new laptop, prepare to dig deeper into your pockets. The average American family would see inflation hit nearly every sector of consumer goods, from electronics to clothing to even food. Goods that used to cost $100 might now run you $180, and many people simply wouldn't be able to afford it. Part 4. The global response. International markets reacted quickly, and it wasn't just Americans who were feeling the heat. Europe, already dealing with its own set of economic challenges, started to worry about the global ripple effect. The European Union was heavily dependent on Chinese exports, and now, if they were caught in the middle of this trade war, there would be serious repercussions for both Chinese and American companies that relied on Europe as a staging ground for goods. Japan, South Korea, and even Australia started to feel the tension mounting as the US and China appeared to be on the verge of an all-out economic war. While these countries might have had their own trade deals with China, they were now forced to consider their future relationship with the US as well. Many feared that the geopolitical fallout could spark a new era of protectionism, where countries chose sides rather than cooperating on a global level. The rhetoric from Washington was heated. In a primetime address, the President of the United States denounced the move, calling it economic warfare and vowing retaliation. "We will not let our economy be held hostage by China's actions," the President declared. The language was intense, and there were hints of further action that would escalate beyond tariffs. Sanctions, asset freezes, and even diplomatic isolation were all on the table. But none of this sounded like a quick fix. It was becoming clear this was going to be a marathon, not a sprint. The Chinese response was equally bold. In an address to the nation, President Xi Jinping called the tariffs a direct challenge to the Chinese people and vowed that China would stand firm in its economic strategy. "We have waited long enough. If the US wants to play hardball, we will do so as well," he said, adding that the country's economic future would not be dictated by foreign powers. Part 5. The Global Tug-of-War. What happened next was expected by many but feared by all. As the trade war escalated, diplomatic channels between the US and China remained open, but they were strained. Both sides called for negotiations, but both also began to dig in their heels. As the days turned into weeks, and the weeks turned into months, countries around the world began to adapt. The global economy wasn't going to collapse, but it was clear that things were changing. Alternative supply chains were being built, new trade partnerships were formed, and companies scrambled to figure out how to navigate the new world order. The real question was whether this would be the new normal, a world where the US and China were locked in a long-term standoff, with economic and diplomatic pressure used as weapons. Could the world recover from this kind of tension? Or would the next few years see an even deeper fracture, leading to economic and political blocs that were increasingly isolated from one another? At the end of the day, the world had changed. But what would come next? Would cooler heads prevail, or would this be the beginning of a new, colder era in global politics? The answers to those questions were still unfolding, but one thing was certain. The world was watching, and the implications of this tariff escalation were only beginning to sink in. As weeks passed, the consequences of the US-China tariff war began to spread far beyond the stock markets and into the real lives of millions of people. What had seemed like an abstract game of high-stakes economic chess was quickly turning into a nightmare of tangible, everyday disruptions. This wasn't just about price increases. It was about the fabric of a globalized economy starting to tear at the seams. For everyday Americans, life became more expensive, and the things that used to be easy to purchase, from cheap electronics to home appliances, suddenly became luxuries that many couldn't afford. The first wave of layoffs came from industries like retail, where demand dropped as consumer spending slowed due to the higher costs of goods. Big box stores, once bustling with shoppers, saw empty aisles. Small businesses, who relied on affordable imported goods to keep their prices competitive, were forced to close their doors, unable to absorb the additional 84% tariff on products they had imported from China. The impact was particularly severe in the Rust Belt, where many factories had become dependent on Chinese raw materials. A steel mill in Pennsylvania that had been importing components from China suddenly found itself facing astronomical costs it simply couldn't absorb without raising prices on its finished products. The result was a slow-moving, silent job loss as demand plummeted. But this wasn't just a hit to blue-collar workers. The ripple effect was felt across the service industry, real estate, and even healthcare, where supply chain disruptions led to shortages of medical equipment, driving prices up. Small manufacturers, who had long been the backbone of the American economy, were hit especially hard. Many had been making the shift towards increased automation, hoping to reduce costs and compete with China's low-wage labor. But with tariffs making raw materials even more expensive, automation couldn't offset the price hike. They were stuck in a dilemma: continue manufacturing at a loss or face the daunting prospect of moving production to countries that were less reliant on Chinese goods. Part 3. The shift in the global trade landscape. Meanwhile, international markets adjusted, but not without significant upheaval. The European Union, already navigating its own complex trade negotiations, found itself drawn into the conflict as American goods became less competitive and Chinese products more costly. Many European companies, particularly those with major supply chains in Asia, began to seriously consider moving manufacturing to Africa or Southeast Asia. It wasn't just about finding lower costs. It was also about avoiding the backlash of being caught in the crossfire between two economic superpowers. Asian countries that had been largely insulated from the trade war's fallout now found themselves scrambling to pick sides. Southeast Asia, which had previously seen a surge in investment due to companies trying to diversify away from China, now saw the US and China offering competing trade deals. Vietnam, Thailand, and Indonesia found themselves courted by American and Chinese officials, each trying to secure favorable trade terms. Yet, these countries knew that by aligning too closely with one side, they risked losing the other. It was a dangerous game of balancing diplomacy and economic need. As a result, new trade alliances began to form. One of the most notable shifts came from the rise of the Asian trade bloc, a loose coalition of countries seeking to diversify away from the US and China. It wasn't an anti-American or anti-Chinese bloc, but a way to ensure that they wouldn't be caught in the middle of a prolonged trade war. This trade bloc wasn't perfect. There were deep cultural and political divides among its members, but it signaled a clear change in the way countries approached their economic futures. In Latin America, countries like Mexico and Brazil also started to look at diversifying their trade relationships. Mexico, which had long been tied to the U.S. economy through the USMCA, formerly NAFTA, now faced the challenge of finding alternative partners. Brazil, which had been feeling the impact of the tariff wars in its agricultural exports, started focusing more on China and other emerging markets. Part 4. The U.S. domestic response, political turmoil, and a new reality. Back in the U.S., the political ramifications were impossible to ignore. The fallout from China's tariffs led to a wave of political instability, especially among key constituencies who had supported the administration's initial tough stance on trade. Many of the rural communities and manufacturing towns, who had cheered the idea of standing up to China, now found themselves suffering the consequences of an economic conflict that had no clear resolution. The administration's promise of America First had sounded appealing when it was about bringing jobs back home. But for many, the reality had proven to be much harsher. As unemployment rates began to rise, particularly in industries like agriculture, steel, and technology, the once solid base of support began to crack. Protest movements emerged in mid-sized cities that had been hardest hit. The U.S. government, already reeling from the rising tensions with China, found itself facing calls for both economic stimulus packages and reforms to the way trade deals were negotiated. There was growing pressure to reconsider the broader strategy. Was it worth it to engage in a full-blown trade war with China, or was it better to de-escalate and find a way to come back to the negotiating table? On Capitol Hill, the political divide deepened. The Republican Party, who had initially supported the administration's tough approach, began to fracture. Business owners and more moderate Republicans, who had seen their livelihoods threatened by the tariffs, began to speak out. Meanwhile, some progressive Democrats, who had long called for a more balanced approach to trade, argued that the tariffs were a symptom of a larger issue, one that was rooted in the U.S.'s global economic power dynamics and dependence on cheap foreign labor. Meanwhile, China, ever determined to maintain its position, doubled down. Instead of caving to external pressure, the Chinese government began to make moves to further secure its own economy. It launched new policies aimed at boosting domestic consumption, decreasing reliance on foreign markets, and pushing for more regional integration. In some ways, China seemed to embrace the economic decoupling, turning it into an opportunity to increase internal development and innovation. In a speech to the nation, President Xi declared, "This is not a war that we have chosen, but it is a war that we will win." Part 5. The long road ahead. A new global order? As the months dragged on, it became clear that the path forward was not going to be quick or easy. The world had entered a new era, one where the economic decisions of superpowers had ripple effects felt in every corner of the globe. The idea of globalization that had dominated for the past several decades now seemed less certain, with countries reconsidering their ties, to both China and the US. In the US, there was a growing realization that the country could no longer rely on cheap imports to maintain its consumer-driven economy. Many began to argue that the only way forward would be a radical reinvestment in American manufacturing, technology, and infrastructure. However, the question remained, would the American public accept the increased costs and potential job losses necessary to rebuild the country's industrial base? In China, the leadership remained resolute. While there were signs of strain in the economy, slower growth, unemployment in certain sectors, the government focused on long-term strategies. They pushed forward with the Belt and Road Initiative, increasing trade with countries in Africa and Central Asia, while also investing heavily in technological innovations, positioning China as a leader in AI, renewable energy, and quantum computing. For the rest of the world, the future was uncertain. Some countries would align more closely with China, while others would continue to back the US as the dominant force. But no one would be immune to the effects of a world now divided by two massive economic forces, both determined to reshape the global order to suit their interests. The 84% retaliatory tariff was more than just a number. It was the opening salvo in a new chapter of global economic relations, one that would shape the next several decades. And as both nations dug in their heels, one question lingered in the air. Would this economic war end with a negotiated peace, or would it lead to a new Cold War, one defined not by missiles and arms, but by tariffs, sanctions, and fractured alliances? As the world watched, the answer remained uncertain, but the consequences would be felt for generations to come.